Bitcoin rallies 6% off the lows over 8 days to really get back to bullish trend and absolutely wreck shorts. But it's not over yet, folks. All that and more on today's Sunday Fuel.
The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
Hello, everyone, to Sunday Fuel. I'm one of your hosts, the ultimate in humility, Sacred Prophet yourself, Tom Hartman, alongside my sidekick in training, Aaron in training, Peter, Bad Guru Hartman. And you know what? I'm feeling pretty good.
You underestimate my power.
Pretty goddamn good. You know why? Because who could have called Bitcoin's magnificent 6% rally in just a week? Who could have called indeed? It just so happens that your boy, Sacred Prophet, is so in touch with the Lord of Liquidity that he can see, that the shorts are going to get wrecked. Let's pour one out for the homies, folks. Pour one out for the homies. Yeah. Libations for the shorts. Burn shorts as the Bitcoin price rises. Peter, it's not just that I was right. It's that I basically called it exactly right for the exact days in the exact time frame. I don't know. It's hard to feel. Is this what Superman feels like? When he takes off. I remember watching Smallville and Tom Welling is floating above his bed, but he didn't know how he was doing it, and he'd wake up and fall down. That's what it feels like right now. It feels like I am at the beginning of my powers of predictions to the point where I can be I could be in Heroes. I could be an alpha. You know what I mean? Remember that show Alphas?
I think so.
The autistic person, and then the guy who could had great aim, and the super strong guy that got all swole, and when he got upset, the roid rage guy, the guy with computers, and then. So it's been fantastic so far. I got to say, I'm pretty happy about it.
Can you pull up a chart? I'm going to be able to, because we got to do this whole thing about what you predicted and what it is.
Yeah, well, if you wouldn't mind just going ahead and reading the post that that I posted just a couple of hours ago, going over. This is the post from last. I started on last week, but that just went over the trades because we had talked about the trade setup for the week ahead and coming up, and basically it just nailed it. Would you mind just giving a quick read? Don't know if you can see it there.
Yeah, I can see it there. I'll make it bigger. Give me a second. All right. Most retail traders get wrecked trading 50x leverage because they don't know how to pick perfect entries. Why was I able to so confidently take a trade from 113 to 117.4 on BTC last week? And then the other.
That's right. That's what here.
Do you want me to read the other one?
Yeah, I just want to make sure, is my my mic set up properly here?
I think it is. It's just a little loud. I don't know if.
All right.
Are your volumes set to the right thing?
Yeah.
Tom
absolutely.
has. Hang on. We got a report here about the audio. Just give me 1 second. Peter could be a tad louder. All right, I can be a little louder. And Tom has to not talk while his sound bits are playing, as his mic doesn't work. Sound bits.
Got it.
Oh,
got it.
All right. I'll try to be louder. Thank you, Melissa.
All right, getting back here to the charts here. So this is a chart I had shared on August 7th, which is just a recap of what we did, what we talked about last week on Sunday Fuel. So this is the trades for last week, where I did a FOMO trade entry here at the beginning of the week because we were in a yellow territory and the price could fall down to this 113 level down here, but it could always have gone up over here. right? So you don't have to enter the FOMO trade. I did. I put half my position on. And then when the price pulled back to exactly the perfect entry here, which was the daily level, right? This is the daily level that was set from the previous Sunday. That was a perfect entry, which then moved up all the way to the weekly target price. So that was pretty cool, right? That was pretty awesome, dead on. And I also said, hey, there's a greedy exit over here. You guys will remember, when there's a nearby level, when there's a level that's nearby, there's always a possibility that the price keeps going until it touches that level, right? And so since here, that level coincided with the monthly, this is the blue line over here, the monthly average, I had a high reason to expect that that's where the price would get to. And once it got there, boom, got out.
So what was your prediction?
That Bitcoin would rally into the week, that would be along into the week, up to the 116.4 level. And that in that process, in that path, that the price might pull back to 113 and then go there.
And was this in your signals dashboard?
It wasn't in the signals dashboard. The dashboard just calls out the weekly trend up to the weekly level, right? We don't call out trades in our signals. We just call out trends. So the trend was
the
bullish.
116. The 116 was there?
116, absolutely. That's
Can
where
you
it
show
was. Yeah, absolutely.
Not that I don't believe you, it's just that you are an inveterate liar, and I'd rather, I'm joking.
Give me 1 second
He's
to
not a
pull this
liar,
up.
but yeah. But I do want people to see the dashboard, sacredprofit.com. You can go and sign up. It's free. You just have to become an affiliate with, not become an affiliate, but use Tom's affiliate link for BitGet and Blofin. But sacredprofit.com, and you can get access not only to the indicators, but the signals. Remember, these are not trade signals. They are, how do you describe them, Tom?
Trend signals.
These are not trade signals. These are trend signals. So I'll let you know some very useful stuff, and you're about to see that here on screen.
So over here we had, this is the signal that showed up. The initial price you see here, that's the closing price of the candle on when the week started. That's the FOMO trade. And then the target price is 116.4, right? For a 1.7% gain and a 50x leverage, that's 85% gain on that position. What we had said during the stream, which is why it's important to take a look at Sunday Fuel, is that there's a path dependency to all this, that we can have a drop and a rise above. Now you might ask yourself, hey, Tom, why didn't you wait then? Why did you take the FOMO trade in here? Well, one of the paths that could happen is that the price moved all the way up to 116 first and then rolled over to 113, right? This is one of the things we talked about last week, that this could happen. And so I get into the trade right away with only a half position, so 1.25% of my portfolio. And if that moved up, well, that's all I would have taken. But since it moved back down to the perfect entry price, I added to my position and then moved up from there. All right. This is why it's very important to have the indicators on your chart to allow the signals to be something that helps you direct your thinking. Should I be going long? Should I be going short? And to not be shaken out of a trade once it goes your way. So over here, I got into my FOMO trade, and you might say, hey, Tom, but we dropped like something like 1.8%, right? To get down to this level. Well, I didn't mind getting into that FOMO trade because 1.8%, I need to drop at 50x leverage. I need to drop 2% in order to wipe out my position. So I was perfectly fine taking the risk down to that level because I believe that we would just stop over here at this level. Let's go to the chart, it'll be easier to see. So totally expected that this drop from the close would be 1.44%, and that 2% would bring me down to around over here, right? So if I did drop 2%, I would have just gotten back into the trade at my second go around. So I'd put on a full position lower down, and all of it loses the half position. But it turned out to work out great. Not only did I have that, I could then get in over here at my the other half of my position and then ride this all the way up. And when you're riding up, it can be nerve-wracking not knowing where you should sell out of your position, right? All the way through here with this drop over here that occurred on from the 6th to the 7th of August, you might have been shaken out of your position. You might have been worried and just FOMO sold. But we know that we're moving up towards our weekly level. So if we take a closer examination here, when the price pulled back, there was a pullback of 1.25% that happened August 6th. This drop I wasn't worried about. In fact, on another account, because we went straight to the daily level, I actually bought here on another one of my accounts and then rode that even higher up. All right? But these levels, it's not a coincidence that the price bounced here at the daily level. That's where institutions are buying.
That's VWAP.
They're buying at these bounces. Sorry, go ahead.
Is that VWAP?
That's VWAP. This is the daily VWAP that was created from the 6th of August right over here. And then the next day even, there's another bounce off of VWAP. The price came down. It went all the way up to the point over here, the daily VWAP that we were targeting, and bounced down to the new daily VWAP and then bounced again. And the next day, it came down to the VWAP and bounced again. Right? Because we're in a bullish trend. Green, 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 green. All the way up to where? To the trend level that we've been seeing on our chart. So these moves are completely... Now that you look at it, Peter, now that you look back on it, does this look just totally obvious?
Yes, I do this little fun thing where I remove all the indicators from the chart and I just look at it and I try to put myself in the shoes of someone who doesn't have these indicators and ask myself, what do I think is happening in this chart? And honestly, for me personally, I'm not a trader. It's a complete mystery. But with the indicators, it's pretty clear.
That's right. Without the indicators, this is what it looks like. You put it back on and all of a sudden you're saying, oh, the price is literally just walking its way up the levels. Now, because the price is responding so quickly and so dramatically to VWAP, this tells me that institutions are buying. Large money players are buying. This is not your mom and pop, your best friend buying a couple of dollars of Bitcoin that's moving the price. When you're seeing things like this, it's because institutions are buying. And when you see great green candles like this, Peter, do you remember what these great green candles mean? When they're happening all at once? This is on the 2-hour chart.
Liquidated.
Shorts being liquidated. So when you have shorts being liquidated, the price gets pushed up algorithmically in order to get to a certain level. Boom, the shorts get liquidated. Then, because people are in profit, there's a sell-off back down to a VWAP level in order to take profits and then purchase again. And then it relies on the shorts being liquidated. And it happens again and again and again and again and again. So thank you so much for the shorts, for giving us your livelihood in order for us to move up. Peter, we have, what is it? If we take a look right now, with all that, with a 6% move that happened in 8 days, within the 8 days that we talked about, right? These are all weekly trades. There's a reason why I trade per week. Within these 8 days, we moved at 6%, which is, and you have to consider a 1% move in Bitcoin is about $1 billion worth of liquidations or money in. That's what I've seen, that usually $1 billion worth of liquidations will give us a 1% move. Don't quote me on that exactly. That's just been my back of the envelope calculation. And how many shorts do we still have? Well, here on CoinGlass, we can see Binance, OKX, and Bybit all together. We still got 17 billion short here. If we add into that the 6 billion that's on the Binance liquidation chart over the last 30 days, 6 billion, that means we're going to have 23% move still to come if these shorts get liquidated. Where would that bring us? Where would a 23% move bring us? Something like $150,000.
I like that. I'll take that.
That's right. Which brings me to our polymarket bet. One second here.
They call me PD Fast Fingers. I gotta be ready. Only one person that calls me PD Fast Fingers, but we don't talk about her.
because you could only last 2 minutes.
Wait, what are you talking about? Where are you taking this? I feel like completely went off the rails.
All right, Bitcoin here. What price will Bitcoin hit in August? We have still the 150 price is at 2%. 135 is at 9%. Heck, the 125 price is at 45%. Peter, these are mispriced odds. All right. If you were to look at this chart and go, hey, what is the likelihood that Bitcoin gets to 125? 125 is not far. 125 is let's call it over here. This is where 125 is. And it's totally possible for the Bitcoin to get up to that price. Look what happens at previous bounces, and we'll take a look at that in a second. That should be more than a 45% chance, a 50-50 shot. And there, $100 gets you 2. Whereas 150 gets you 3,700. That to me is sweet, sweet odds. Remember, folks, these bets on Polymarket, on Kalshi, and what have you, don't require the price to get to these targets, these outcomes. Bitcoin doesn't have to get to 150 for you to double your money. The odds just have to move from 2% to 4%.
And then you can cash out early.
You can cash out early if you just want to double your money just for funsies, just for shits and giggles on the side. All right? That's all that's required.
Is that the same on Kalshi?
Completely mispraised. Sorry?
Is that the same on Kalshi?
I haven't checked on it. I don't normally use Kalshi myself. When I've checked in the past, it's been pretty similar because you get an arbitrage opportunity that way. You can imagine that some people will go long on one, go short on the other for the same thing in order to make the difference in price. But when I've seen it in the past, generally it's been the case. You just need to be a U.S. citizen in order to access it. Well, U.S. located. Actually, no. You need to be a U.S. citizen to even be able to sign up to the platform.
All right. So just what segment are we on here right now? I'm trying to think about the edit.
We were just talking about the trades for last week, right? There is 2 things we pointed out last week, and that was the rise of the price to the weekly level at 116.4, which we did hit. And the with an extension all the way up to 117.4, which we did hit, with the potential pullback to 113, which we did hit, which ended up being a perfect entry, as we discussed. Those are the trades for last week. That's fun. But Sacred Prophet, what about the trades for next week? You know what? I'm glad you asked. And you know what? More people are asking old Tommy Boy here. More people are messaging me going, hey, you know what? How about I just stop trying to guess what's going on and go to the person who's just been right after right after right after right after right? Look, don't worship me, folks. Don't worship me.
You underestimate my power.
There are things to look forward to this week. So let's reset. Channel our inner Back to the Future, our inner Zemeckis, and we take a look. Now, the pattern that we just had for the last week is a crazy bullish pattern, right? Because instead of hitting the 116.4 level right away, right? Remember I said the worst thing that could happen is that this price just breezes up. If it just went straight up without coming down, that would have been a problem. Mm-hmm. What we had was on Marauder Monday, which did extend into Tuesday. Remember, Marauder Monday, which is the price, whatever Bitcoin does on Marauder Monday, generally speaking, it does the opposite for the next week. But Marauder Monday can extend into Tuesday. And really under some circumstances, Wednesday, but I've seen that rarely, but usually until Tuesday morning. And right at noon on Tuesday, that's where the price fell down to the daily level here at 113. All right. So that, because we didn't actually hit the weekly target first and we first went down, this was hella bullish. Plus, you can see here that the actual low that hit there the day before, or 2 days before, was not only near the trend line, but directly on one of our wave levels. These are long-term trend wave levels. super, super bullish over there. So we've got a bounce up, a pullback. The pullback was a higher low, right? There's a higher low versus the lower low over here. So again, another thing that's super bullish. And we crossed through 2 daily levels. This was a daily level over here that we didn't really talk about, which was at 113.7. And then this level over here at 113. So all these things happened together. The price pulled back into this deep, deep supportive zone and then launched up, which is what we want to see. Whenever we want to see the price climb up a bullish trend, this is what we want to see. And when we want it to fall down a bearish trend, we want to see this happen in reverse. It's like taking a step one at a time. You don't want to take them 2, 3 steps at a time, because then you could really tumble. All right. Now, if we take a look at the last time we saw this type of pattern over here.
Just before you do that, are we talking about the upcoming trade or the previous trade? It sounds like we're talking about the previous week right now.
I was just setting up the previous week so I could talk about the upcoming trade right now.
All right, so let's just finish up with the previous week.
Yeah, I'm done with the previous week. Now we're talking about the next week, but that pattern that we just went over, the stair stepping, we've seen this before. So for example, over here, let's see if it's a little bit clearer. Over here, we had the price. This was back in June 23, where the price fell here. You guys remember this? People calling for the end of the cycle? People are always calling for the end of the cycle. Let's just hide the trend here, make it a little bit easier to see. And let's hide the dailies. All right, this might be a little bit easier to see. So here we had the price of Bitcoin that fell to this level over here of 99. You guys watch the stream, you remember the 99 level from the past. And I said that because when we blew up, we didn't touch the 99 level, right? This was for weeks we hadn't touched the 99 level. There's a high likelihood that we're to come back to that level, which is exactly what we did eventually. Now, once we cleared it, then we were off to the races, right? We're off to the races, just like before when we're down here at the 74 level. Once we cleared it, we're off to the races. And we just did that again. The price moved up beyond, came back down to the weekly level, and now is launching up from over there through a massively supportive range. So the likelihood now that we get a step change where the price goes well above the previous high is significant. Over here, if we take a look, measure from the lows, the high ended up being about just about twice as high as the drop that we had in, right? This drop that we had over here, it's about twice as high to get to the next one. That's generally what we see. Over here, the drop in to the next high, this high over here was about right, actually more than twice the level, but you get the move up that's proportional to the drop that you had. And over here in the cup and handle that we're in right now, or what could be seen as a cup and handle, we have this drop from the low here. Our midpoint could be the lowest part of the midpoint would be over here. We can get to 123, 125 in no time. Right? So we're really just halfway through this move up, because we can get straight up here in order to cross this all-time high and double the depth that we're in. So to me, seeing 125 would be a no-brainer to see that pretty soon, that we're in that process right now. And that process tends to accelerate afterwards. We tend to get a massive move up. We're not even in the parabolic move just yet. So there's tons of upside potential. Now, the bearish case here for the week ahead is that we're still in this trend here, right? We haven't broken out of this trend. This hasn't broken yet. We're at the top of it. So it could always turn and fall down, right? Especially as we take a look at what's going on for this week. The target price is likely to be 115.7. All right? That means the bias, guys, is for the price to pull back over here. Does it have to pull back to there now? No. Just like we saw before, it could take a couple of weeks before it returns there if the price keeps moving up. But it could happen this week. The healthiest move is for it to happen this week, especially on Monday or beginning of Tuesday. That would be the best idea here, that the price falls 2.5% down to the 115.7 level. That would be ideal for a bullish move. So you wouldn't be shorting here unless you want to risk that. What you would be doing is adding a limit order down here at 115.7 to grab it as we make a move back up. If that doesn't happen and we continue to move up, then you're going to be looking for a top-in pattern for later on for the price to fall. But we'll see how the weeks look like as they develop. So right now, for next week, if you want to take the short trade, which I don't recommend, but if you did want to take the short trade, it would be from the price where we are right now down to 115.7. If you want to take the long trade, it would be an order 115.7 up. All right, makes sense, everyone?
Makes sense. And then the lower your entry is when you're going long, the more you can withstand the turbulence of the market. If you go long, if your idea is to take the long now from where we are right now, then you increase the likelihood that you get shaken out, liquidated if it drops by 2%. Do I have that right?
That's right. Now, since this drop here is less than 2%, it's only it's above 2%. If you go long here because you're FOMOing into a long, you make it far more likely that you're going to get liquidated. So you might say, hey, Tom, but I don't want to miss it.
If you're trading 50x.
If you're trading 50x leverage. If you're trading 50x leverage, you could only suffer a 2% drawdown. If you're trading 25x leverage, you could suffer a 4% drawdown. All right? So I would not recommend it in here now for long. And you might say, hey, Tom, but what if I missed the whole move up? Well, that's just what it is. You can FOMO in if you want to, but the likelihood is that you'll lose money on that trade. All right. Now, how high could we go? Once we get past the all-time highs, just keep in mind all the shorts that still are holding short, right? We just saw, just based on CoinGlass, that there's at least $23 billion worth of shorts that are being held right now. That's a massive amount of shorts. That's crazy. It just keeps increasing. I don't know what they're seeing. I don't understand this idea that, hey, the shorts are going to be right. The price of Bitcoin is going to roll over, and they're all going to make oodles and oodles of money. I just don't see that happening. But on every dip, these shorts get more and more. But I thank you for your service. You keep adding that fuel to the fire. Let every faithless short be wrecked. That is my pledge. How, Peter, people can bet against the empire in such a bullish regime, I cannot tell you. Peter, before Donald Trump came into office, Biden was goosing up the stock market in order to win the election. You remember that? Then,
well, that's a conspiracy theory.
Then Trump came in, and before he was even inaugurated, was promising essentially all-time highs for markets, right? So that continued. Then he comes in, and not only does he go, hey, hey, how about we just replace Powell and get lower interest rates? And he says, crypto, let's go ahead. Let's tweet out crypto. Let's Truth Social crypto. Let's get that rolling. Let's get these numbers up and to the right. Then they do the tariff things, and it causes a small hiccup within the stock market. What did they do? Taco trade. Trump always chickens out, reverses the other side. Stock market go up. What more do you need to understand that both the fiscal and monetary side, what they want is for this number to go up? 3 things are for sure true. Israel's going to win the war in Gaza. The Epstein list has never been released. And all-time highs will continue until morale improves.
Disavow.
I'm not saying what I'm for or against. What I'm saying is that if the train is moving to California and you want to get there, you jump on that train.
No,
Last
no. Why do you got to bring up? Why do you have to bring up? Oh God, I hate you so much.
I was just bringing up the things that we all know is true. Sorry. Don't take it too literally, Peter. Don't take it too personally because
you don't know you're dreaming.
this is just all a dream.
I hope so.
It's all just
Somebody wake me up.
You're just gonna wake up.
God. Oh my God. Well, there goes the algorithm.
Or maybe we switch to the better algorithm. I don't know.
The better one. Where's my red hat?
To the holy global empire and to all the things the empire provides to me.
Make sacred profit great again.
Well, I gotta say it's been pretty exciting. Other than that, we are just to finish that off. We are heading into resistance with trends at the trend levels right now. So there is resistance here. I would just be sitting on my hands waiting for a pullback. The one thing I do want to end on here to say is this thing about altcoin season. Right? People have been talking about altcoin season, about when's altcoin season going to start and all that sort of thing.
Pull up a chart for altcoins. Pull up Cardano or.
Yeah, sure.
I don't even like calling Cardano an altcoin. All right.
Well,
to me, exactly Cardano is basically Bitcoin. All right. All you Solana and Ethereum freaks out there, come at me. All right. No, I'm kidding. I'm joking.
Well, we're in altcoin season now. All right. If you're thinking that later on we're going to be in altcoin season, that's not what's going to happen. We have a Binance, I think, is all-time highs. Ethereum is breaking. Is it Ethereum breaking all-time highs? It's at least breaking out. 4,225 per coin. You have ADA trending up, Solana trending up, Doge trending up. Altcoins are ripping. They're just not ripping like what we're used to, because what I realized recently, Peter, is that people think of altcoins the same way they think of meme coins. We're not going to have a meme coin season. The frenzy that you guys saw last cycle was due to all the fiscal stimulus that was giving out to people. So people actually had money in their hands, given by the government, given by whatever. They had time in their hands because they weren't going to work anymore and all that sort of thing. Their savings that they were spending, blah, blah, blah. And they were gambling in the stock market and inside meme coins. And so you had stuff just absolutely rip, right? The Safe Moons of the world, the Lunas of the world. I mean, it was just absolutely crazy. That's not going to happen now, because the money that's coming into the crypto markets is not coming from Joe Blow. They don't have any money. Inflation's up. They ate through their savings. Job numbers are terrible. The economy is actually doing pretty badly. I mean, pretty badly. People are losing thousands and thousands and thousands of jobs are being gone. AI is taking over stuff. Robotics is taking over stuff. It's going to be a problem. So the idea that the regular Joe Blow is going to be convinced to go buy SafeMoon 2, I don't see that happening. So when we're talking about altcoins, I'm not talking about meme coins. I'm not talking about NFTs. I'm not talking about any of that stuff. I'm talking about the layer ones. And what's going on in this space, and we're seeing it happening again and again, is that institutional players are now making changes in order to try to get crypto into 401ks, right? Donald Trump just did an executive order in order to, or was it guidance or something like that, in order to get crypto allow crypto into people's 401ks. That means people are going to be looking at blue chip crypto, right? It's not only going to be about Bitcoin, it's going to be about blue chip crypto, because just like people can buy the index there, or they want to buy their favorite Microsoft or Google stock or whatever, they also want other things that could potentially go up 10, 100, 1,000 times, right? And that's not going to be Bitcoin. Bitcoin's not going up 100x within the cycle. But people don't also want to put in their 401ks Pepe coin or Shiba Inu. I don't see that happening. So what is going to happen is that the institutions are starting to create crypto products. You said the word Robinhood, with the whole tokenizing private equity for OpenAI, and I forget what the other assets are. They're experimenting with this. We're going to have layer ones and other projects come onto the scene. We'll have real world assets. We'll have a whole other a potential bubble, but it won't be meme stuff, or it won't be like the meme stuff and NFT stuff that we were used to in the last cycle. So we are in the explosion of the altcoins right now, but it's going to be in the layer ones. And then obviously some other things that are launching that are interesting, but it's not going to be like the fervor that we had last time, because it's not regular people who have money, it's institutions. It's also why when you're taking a look at the move of the of Bitcoin in the cycle, it's not chaotic like it was previously, right? Over here, actually, let's open up another one. All right, the move that we had in the last cycle was massive because of the, once in 100 years, trillions of dollars of stimulus globally. The run up from 2015, 2017 is the first time Bitcoin really started getting mainstream like trading visibility. Where you had Mt. Gox, you had places where people can trade. It wasn't just on Excel spreadsheets anymore and that sort of thing. So you had this massive run up. So this was huge. And then we had this one, which was huge, but it wasn't as big as the run up from over here, right? This run up over here, I think it was like thousands of percent. Yeah, 11,000% run up. Here, I think it was a 2,000% run up. Yeah, 2,000% run up from the lows of 2019 to the top of after lockdown. And now this move that we're seeing right here, you see how measured this is? How steady? It's not this parabolic move up. It's the steady move forward as institutions are buying slowly in a very deliberate way. There's no frenzy going on in that front. So I'm not expecting altcoins to be like what we had last time. We're in a new paradigm where institutions are driving things, which is pretty exciting. Pretty exciting. A lot of money to be made. This is why I'm all for leverage plays, poly-market bets, and that sort of thing, as opposed to combing the Reddit and 4chan message boards in order to find out what's the new HEX token I could get in. Those days are over.
So, okay, so I do understand the meme stocks, those moves not happening. I do understand that Bitcoin is becoming more steady and fundamental. But for the altcoins, were you suggesting that the altcoins can go up 10x, 100x, or not?
Yeah, absolutely. So whether that happens this cycle or the next cycle, I don't know. The question will be, what kind of crisis are we going to have? My eye is to September, October, to see what kind of crisis causes the Fed to cut. If you want more information on that, us discussing that, you could go to the Traders Pulse YouTube channel for a video we did last Friday talking about how the Fed is starting to talk about how they might cut rates, and there's a debate whether or not they'll cut, 25 basis points or 50 basis points, not even if they're going to cut or not. People are seeing a recession coming on the horizon. But because of that, because people see a recession coming, it makes it less likely that it will occur. So either a massive shock comes in that people aren't anticipating, COVID style, Armageddon style, Brexit style, whatever it is, war or whatever it is that could cause a sustained problem that that needs to be responded to through fiscal and monetary policy, or this recession that people are seeing ahead of us never gets here. Because as people are positioned for it, it actually mitigates the actual recession. In the financial markets, the economy is going to be rough. But in the financial markets, we might not actually get that drawdown. That's why we're seeing all-time highs in the S&P and NASDAQ, and people go, huh? Wasn't there 9,000 jobs laid off from Microsoft? Wasn't there problems all over the place? Aren't people just losing their jobs left and right? Yeah. But we all anticipated that. We all get that. Isn't there a big fiscal cliff because of the refinancing that corporations need to have in order to get debt at a lower interest rate? Yeah, but they've done this for 5 years now. So we'll see. They also promised us a worldwide famine when Ukraine was invaded. Not getting any famine. I'm still getting all my Twinkies at the grocery stores, no problem. So when we're prepared for what's going on, we don't necessarily always know what's going to happen.
From my point of view, the Jedi are evil.
Sometimes you just have to shift your perspective, and then you see opportunities where they weren't before.
All right. I seem to remember last week, I think it was on this channel, or it could have been on Trader's Post, you talking about the Dixie, the DXY, and you weren't sure if it was going to break up and out, signaling a bottom, a top for the market.
A top for the market, right?
So I hear you're saying, you called it, but you did have some worry last week that we could be in trouble here.
Yeah, but not for the week. For the week, I thought almost certainly that was going to be the move, especially with the idea that if I was wrong, all I would lose is the one position in my account. So the risk reward was totally worthwhile. When it comes to the dollar here, these are always long-term plays, right? If you take a look at the dollar, we're dealing with something that takes weeks to play out. All right. So technical analysis on the dollar is pretty difficult. All I really care about for this is the trend. So let's add our trend indicator. And let's move it to the 1 month. So the 1 month trend on the dollar is, I find, the best source of truth.
By the way, if you're using the trend indicator, you have to set the time frame for higher than what your chart is, or you won't see those boxes. I was dealing with that this weekend.
Yeah, I actually added a note to just update that, so if people did that, it would give them a message on the chart. Hey, change your chart settings.
Awesome.
So you never want to be premature in the move on the dollar, right? Yes, we have a red trend that was broken by yellow. And oftentimes when that happens, we do move to a different trend, to a bullish trend. Like we saw over here, red to yellow, move to green. Over here, green to yellow, move to red. However, what you want to see usually in that yellow period is for the price to move dramatically in the other direction. So over here, it moved from green to yellow to red, but in that yellow, it dramatically moved bearishly. Whereas we're not having that here. In fact, we have the yellow that's pretty narrow. It's pretty small here. And the price has fallen down. So when this happens, what can happen is that you have a sideways movement for a while, and then a fall. This is a bear flag, right? This is what we call a bear flag. And it makes sense that we would, if it's going to happen, it would happen here because we are at our trend, right? This trend over here that I have drawn is a trend from 2014, right? So we're in this channel trend. So you'd imagine that if it's going to happen, it would happen around there. So over here, it tried to happen again back in 2021. It didn't happen. But at some point, this trend could break where this happens, and then the dollar falls down to over here to the 90 level. So that could always happen, which would coincide with a massive run up. So we don't know yet. And when I take a look on the daily, we're right on that, right on this trend, but we're sort of like a little bit off. You see how we're not actually touching it yet? Here it's easier to see on the weekly, right? We're not actually down there. So we can actually fall a little bit more down here. And that's more than enough in order to get more upward movement, a blow off top in assets.
So the lower it goes, the more bullish it is for assets, including Bitcoin. The higher it goes, the more bearish it is, because when there's more of a demand for dollars, that means people are selling assets in order to acquire dollars. And when the DXY is going down, that means people are selling dollars for assets because they believe they'll get more money in the future with assets.
Well done, Peter. Well done. He is my son, and he is well loved.
I'm figuring it out. It's all coming together.
Yeah, but it's no point in calling the trend move in the dollar until it actually happens. Here, let me just pull up the chart one last time to show you what I'm talking about here. Over here is an example where we had the red trend, right? It turned yellow. We even had a little bit of a green, and then it still continued lower. So 1/3 of the move still was yet to happen before it actually moved back to bearish trend, bullish trend.
Gotcha.
All right, Peter. Well, that's it for me for this week. I'm going to go back to working in the mind to get sacredprofit.com that much better. There's all kinds of things coming. There's new indicators, there's new tools for the back end, and there's a refinement of our back end. I know a lot of people have signed up and they have some issues getting the signals, getting the indicators or what have you. Definitely going to be helping you guys out. I want Sacred Profit to be free and unbelievable, where you go, I can't believe the value that I'm getting here. But it'll be one step at a time. In the meantime, tune in to Sunday Fuel every week in order to get banging predictions for what can happen, because just these streams, if this is all that I was doing, it'd be so worthwhile to you. God, Peter, the people be telling me, Tom, you're all right, makes me feel absolutely fantastic. Is there anything you want to say before we leave?
In the chat, Tipper Looney says, Peter, no longer exit liquidity, Hartman. I like that. I like that. I'm learning. I wish I could pull up that chat on screen, but I messed it up there. Very cool. Thank you to everybody who's watching. Remember to like and subscribe to the channel. Look, maybe you don't want the indicators. Maybe you're not that type of person. Maybe you don't like making money. Just kidding. Just channeling my inner sacred profit. You can always like and subscribe. I'm learning what Tom wants here, and I'm learning not only are you going to get great information here, we're aiming to be the most entertaining crypto channel on the internet. So like and subscribe. You're going to love it.
All right, folks. And as always, don't worship me. Have a great night.
Worship me, oh no, no. Lift up the stream that parts the sea. I'm just a vessel in velvet. Burn those shorts. Burn them. Don't worship me. Praise where the river flows to me. Prophet ain't the name. Prophet ain't the name above every name.
Oh my God. You're crazy. Oh my goodness.
Great. Whew. Seeing that move in the dollar, Peter. God. Seeing the move inside of Bitcoin, just wrecking those shorts.
Well, I mean, you like it when those shorts get wrecked. You sent me a message last night here on my phone. The shorts are getting wrecked.
I just love when I'm not surprised. I'm like, yeah, of course, 113. A friend of mine is like, wow, you called it. Yep, definitely. I'm trading at 56 leverage. Oh my God.
I'm Tom Hart.
Is it tripping you?
And I built this signal group because I know what it's like to trade in the dark. Second guessing every move, chasing unreliable calls, getting burned by noise. I wanted something better, so I created it. What I offer here are advanced signals backed by premium indicators I've crafted from years of hands-on experience. These aren't cookie-cutter tools. They're grounded in multi-time frame logic, tuned for cross-asset trading and built to handle real-world conditions, not just